Imagine working hard your entire life, only to realize the rules you've been following are built on myths. What if the key to financial freedom wasn't what you've always been told? Welcome to Forever Finance, where we want to live our lives our own way. Stick around to see which of these 5 financial myths might be holding you back from achieving the wealth and freedom you deserve. Myth 1. You need a lot of money to be wealthy. Meet Jack, a 25-year-old bartender from Sydney. Jack earns a modest income, but by the time he's 40, he's accumulated over $500,000 in investments. How? It's not magic, and it's definitely not because he started with a fortune. Many people believe that wealth is only attainable if you earn a 6-figure salary or inherit money. But the truth is, wealth is built through consistent habits over time, not the size of your paycheck. Jack started by investing just $50 a week into a low-cost index fund, leveraging compound interest to grow his wealth. Consider the story of Warren Buffett, one of the richest people in the world. Buffett didn't start with a massive fortune. He built his empire by investing small amounts consistently from a young age. In Australia, programs like micro-investing apps such as Raise and Spaceship allow you to invest small amounts with ease. Over time, even small investments can snowball into significant wealth. Building wealth isn't about how much you earn, it's about how much you keep and grow. Myth 2. Budgets are restrictive and boring. Sarah, a young professional in Melbourne, always thought budgeting meant giving up her daily flat whites and avocado toast. But instead of feeling restricted, Sarah discovered that budgeting gave her more control and freedom. Budgeting gets a bad rap as a fun killer, but it's really a tool to help you prioritize spending on what matters most. Sarah used the 50-30-20 rule. 50% of her income went to needs, 30% to wants, and 20% to savings. She realized she could still enjoy her favorite cafe breakfasts while working towards her dream Europe trip. Australians love their lifestyle, but living paycheck to paycheck can be stressful. By using apps like Pocketbook or Money Brilliant, you can track your expenses and see where your money is going. Budgeting isn't about saying no to everything. It's about saying yes to the things that truly matter. A budget isn't restrictive, it's empowering. It gives you the freedom to spend intentionally. If you are finding these busted financial myths helpful, please let us know by liking the video. This tells us what you want to learn more of. By subscribing to the channel, you will know as soon as there are more helpful videos available. Myth 3. The stock market is only for experts or the rich. Tom, a plumber, used to believe the stock market was a playground for millionaires in suits. But with just $500 and some basic knowledge, Tom now owns shares in major Australian companies like Coles and CSL. Many people think the stock market is risky or only for experts. The reality? It's one of the most accessible ways to grow wealth. Platforms like CommSec, SelfWealth, and Stake have made investing simple and affordable for everyday Australians. Take Afterpay. If you'd invested $1,000 in Afterpay shares back in 2017, by the time it merged with Block in 2022, your investment would have grown exponentially, and you don't need to pick individual stocks to get started. Exchange-traded funds like VAS or A200 let you invest in the entire Australian market for as little as $50 a month. The stock market isn't exclusive. It's a powerful tool that's open to anyone willing to learn. Myth 4. Buying a house is the ultimate symbol of financial success. Emma and James, a couple from Perth, saved for years to buy their dream home. But after moving in, they realized they were house poor, struggling with mortgage repayments, maintenance costs, and little money left for anything else. Owning a home has long been seen as the Australian dream, but it's not always the smartest financial move. Renting can often be cheaper, especially in cities like Sydney and Melbourne, where house prices are sky high. The extra money saved by renting can be invested elsewhere for greater returns. A report by CoreLogic showed that Australian property prices have grown over time, but not as quickly as some investment portfolios. For instance, instead of locking all your money into a $1 million home, you could invest in a diversified portfolio of stocks and bonds and potentially see higher returns without the stress of home ownership. Home ownership is not the only path to financial success. Consider your goals and options before committing to a mortgage. Myth 5. You need to be a financial expert to gain financial freedom. Liam, a schoolteacher in Adelaide, never studied finance, yet by following basic principles and using free online resources, he's now on track to retire early. Financial freedom isn't reserved for people with economics degrees. In fact, many experts preach simple, repeatable strategies. Liam started by understanding the basics, spending less than he earns, investing in low-cost index funds, and avoiding high-interest debt. Resources like The Barefoot Investor by Scott Pape have empowered millions of Australians to take control of their finances without needing advanced knowledge. Podcasts like Money, Money, Money and YouTube channels like this one, focusing on Australian finance, also offer free, relatable advice. You don't need a PhD to achieve financial freedom. Basic knowledge and consistent action are enough. Remember, it's not about how much you know or earn. It's about the habits you build and the choices you make. Which of these myths surprised you the most? Let us know in the comments below. There are plenty of myths surrounding personal finance. Some of these include investments that actually cost you money. Check out this video to make sure you don't get caught out by them.